Chalo, we are back. In this particular recording, we are going to continue with the banks chapter, the second part of banks. So till last part, in the last recording, we did it till here, somewhere here, correct? All the provisioning, and these 2 points were very important if you remember. Classification of NPA. One, it was always based on record of recovery, and second one, it is always borrower wise, never facility wise. This again is a short note question. Accounts regularized near the balance sheet date. What is this accounts regularized near the balance sheet date? Accounts means normal accounts, advance accounts. Basically, whatever they give loans and advances to us, no, our account is opened in the bank, correct or not? So that accounts are getting regularized. Regularized, some kind of galata they are doing it. What kind of galata? Now, what happens? No, common sense. Whenever there are branches of banks, for example, there is one SBI branch in Nungamakam. Take care now. You think and tell me, does the branch want more NPAs to come or less NPAs?
Less.
Of course, definitely less NPAs, because more NPAs now, that means the bank is not performing well. The bank is not checking the credit worthiness of the borrower before giving the loan, correct or not? So that is why they always want that as much as less NPA should be there in the branch. What happens? No? There are two things. I'll explain on both perspective. If there are too many NPAs, no, what will happen? The branch or the manager, he will have to listen from the headquarters. He'll not get that promotion and this that. Because of that, what he'll do, if at all there is any account which is going to get slipped into NPA, he himself will do some galata in that account, and he will not allow that NPA account to slip upon asset account to slip into NPA account. How? He himself do some regularization. Regularization means some galata in which account, in that account which is going to fall under NPA. For example, the branch manager had got a target. Key this year, if there are no more than 15 NPAs, I'll promote you. For example, there were 18 NPAs that year. So what did you do? As on 31st March, they will see, how many NPAs are there. Correct or not? Yeah. So as on 31st March, you saw there are almost 18 NPAs. So for the 3 NPAs, what did he do? He himself did some galata. Galata, he himself passed some dummy entry. He himself passed some dummy entry. He got some checks from the borrower telling that you give some checks. What will happen? I'll put it the checks in the next year. It will get bounced back. So what will happen? As on 31st March, there are checks in hand. What will happen? It will not get converted into NPA. Understood? Kya? So they're not allowing an account which is actually supposed to jump into NPA, but they're not converting it into an NPA. Understood? Yeah, it can be a fraud. It can be something from the borrower side. What he will do? He will make some same thing. He'll give one check, but ultimately it is going to get bounced back in the next year. So regularization can be done from the bank side also. Regularization can be done from the borrower side also. What is regularization? Doing some kind of masti, some kind of galata in the account, so that wherever it was going to fall into NPA, they saved it from falling into NPA. But you think and tell me, common sense, was it supposed to get into NPA? Yes, it is. So if the auditor finds there is any account near the balance sheet date where there are any small credits have been made, chinna credits, just to save that account to slip into NPA, the auditor will say these are deemed to be NPA. Understood? Same thing. The asset classification of the borrower accounts, whereas solitary means single, or a few credits are recorded before the balance sheet date. If there is only 1 or 2 credits or very single credit matlab repaid the loan amount, in that case it should be handled with very care and without the scope of subjectivity. Where the account indicates any inherent weaknesses on the basis of the data available, the account should be deemed as NPA. For the entire year, he did not make any payment. Take enough. Last balance sheet date March month, he made some small payment. Why? To safeguard himself from falling into NPA. In that case, it is deemed NPA. The auditor should check for sample transaction immediately before the closing of financial year and immediately after the closing of financial year. Before closing financial year, that time also you check that account. After closing, I don't know, check bounce back. Before 31st March, you got the check. After 30th March, it will get bounce back. So check it if the payment was received or not. So you have to check something before the financial year also and 10 days of the next financial year also. Like 25 to 31 March, you'll select, and 1st April to 10th April, you're going to select. Entire period you're going to select. Understood? Kya? Pakka kya? This is called as accounts regularized near the balance sheet date. Then very important, government guaranteed advances. What guaranteed advances? Government. You remember guarantee? In this case, who's giving guarantee? Government. For example, I go for a loan to a bank. Government will give a guarantee on behalf of me to the bank. If he doesn't pay, I will pay. There are two types of government. One is central, and the one is state. If you remember something called as this thing, one is provisioning and one is income recognition. Provisioning, only a non-performing asset. Once it is converted into a non-performing asset, it must the income must be recognized on a cash basis. You remember this? Perfect. And one more thing I'll tell you. So central government guaranteed advances are there and state government guaranteed advances are there. There is one exception given to central government guaranteed advances. What? There is one exception given to central government guaranteed advances, that you remember, no? Ki once the that 90 days has been crossed, this has been crossed, then has to be converted into an NPA and provision has to be made. 15, 25, 40, 100. So provision is one thing and income recognition is the other thing. So for central government, if central government guaranteed advances are there, then they have given an exception. What is that exception? They are told that if a central government guaranteed advances is there, where the guarantee is not invoked or repudiated, the central government has not cancelled the guarantee, would be still classified as a standard asset but regarded as a NPA for income recognition. What did you understand by now? If you remember, once an asset is converted to NPA, first thing, it has to make provisions 15, 25, 40, 100, and second one, income should be recognized on cash basis. These two things are to be followed by a bank when an asset has to be converted into an NPA. Read this again. What is the exception? If it is a central government guaranteed advances, where the guarantee is not repudiated by the central government. For example, I made a default, but the central government I will not repudiate the contract. I will still make sure that he will pay or I will pay. He has not repudiated the contract. In that case, it would still be classified as standard asset only. It will not be considered as an NPA. But for what purpose? For provisioning purpose. They will not make any provision for my asset account, but it will be regarded as an NPA for income recognition purpose. That means now the bank will recognize the income only on cash basis. Irrespective of being converted into NPA, provision is not made. The 15, 25, 14 provision is not made, but for income recognition purpose, it is cash basis. It is NPA. But this exception is not given to state government guaranteed advances. It is like a normal advance only. See, the situation would be different if advance is guaranteed by a state government, where advances is to be considered NPA if it remains overdue for more than 90 days for both provisioning and income recognition. But above, it was NPA only for income recognition, not for provisioning. Understood what I tell? For state government guaranteed advances, it is considered NPA for both provisioning and for income recognition. But for central government, it is NPA only for income recognition basis. For provisioning, it is still considered to be a standard asset only. Why? Because central government is standing behind.
So there is no time for
no for central government guarantees. No, nothing for central government guarantee. Understood? Kya? Next, advances under consortium. What do you understand by consortium? Group. Consortium means group. That means tomorrow if Vijay uncle, some other guy, take a big shot guy, he has come and asked SBI, HDFC, give one 800 crores loan. Will HDFC take the entire risk of giving 800 crores loan? No. What will it do? It will call another bank, Kotak. Hey Kotak, this guy has come. He is asking 800 crores loan. I don't want to take the entire risk. Can we divide the loan and give it to him? If Kotak says yes, then what is happening? These two banks together are giving one shot loan to that one person. These two banks together are giving one loan to that particular one person. For example, this HDFC was the first bank. No, it's called as the lead bank. What bank? Lead bank. Why? Basically, he'll be having the higher share. Out of that 800 crores of loan, 500 crores of loan will be given by HDFC. 300 crores of loan will be given by Kotak. These two banks are going to give loan to that particular one person. So, whom HDFC, it is called as the lead bank, and those are called as other banks. Understood? Consortium advances mean advancing loans to a borrower by two or more banks jointly by forming a consortium. Joint appraisal, joint control, joint monitoring everything will be jointly to exchange valuable information among the banks. Usually a bank with a higher share will lead the consortium. In my case, HDFC was having the higher. Consortium advances should be based on record of recovery of the respective individual member bank. For example, I told you, NPA should be based always on record of recovery. Hey, am I right? HDFC gave 500 crores. Kotak gave 300 crores. HDFC will have its own NPA classification for 500 crores. Kotak will have its own NPA classification for what? 300 crores. That means he has to pay EMI to me also. He has to pay EMI to Kotak also. If it is NPA in me, that doesn't mean it should be NPA in him. Because what if he is paying properly over there? So it must be on respective individual member banks and other aspects having bearing on recoverability of advances. That the remittances by the borrower under consortium lending arrangements are pooled with one bank, and where the one bank receiving the remittances is not parting the share of the other banks, the account should be treated as not service in the books of other banks and therefore an NPA. What is the second part? First part I told you ki these two banks are receiving individually their own EMI. What if Kotak says ki do one thing, HDFC, you get the entire 800 crores worth ka EMI in your account, then you transfer my 300 crores worth EMI to my account. This is called as pooling. Understood what I mean? But this HDFC, he is not transferring that EMI amount to Kotak. Kotak will wait for 90 days. Same applicable to now. Kotak will wait for 90 days. If HDFC is not transferring that amount, Kotak will mention that account as NPA account because he did not receive that person's money. Understood? Okay? But there's a whole different system for it. Take a whole different system for it. There are two options. Either you both individually receive your own money. If not, pool your money. The lead bank who's receiving the money should send that money to the other bank. If that other bank is not receiving that money from the lead bank, he will consider that account to be NPA in his own books of accounts. Understood? Kya?
So that is if we assume that Kotak lent money to which is
No, again, it's a whole different system. You'll not understand. As of now, from audit perspective, learn this much. The banks participating in consortium therefore need to arrange to get their share of recovery transferred from the lead bank. Please make sure that the other banks are receiving the money from the lead bank or to get an express consent from the lead bank for transfer of their share of recovery to ensure proper asset classification. There are too many contracts signed between both the banks. Taken again, this way you have to give the money, else I'll consider this account to be an NP account. Understood? Kya? Then directly coming over here, accounts where the erosion in the value of security frauds committed by the borrowers. If you remember, whenever we ask for a loan, what will they ask? What will the bank ask? A security. Correct or not? I gave an example in this class or which class I don't remember. I took a loan of 1 crore. They will ask me a security of 1.5 crores. I give a land to them, 1.5 crores. So the day when we give a security, the bank officials will come and inspect the property. They will not be like 1.5 crores. They'll call valuers, they will do the valuation, the bank officials will come and do the inspection, whether the land is really worth of 1.5 crores or not. They will do all the soil testing and all. So when I took the loan, it was 1.5 crores and the loan amount was 1 crore. Every year, these bank officials will come and inspect the land. Every year, whether it is fit or not. And to check the current market value, correct or not. What if you think and tell me if you're a bank person, if you're a bank, I came to your bank, I took a 1 crore loan, I gave a security of 1.5 crore worth land. That day when I took the loan, the value was 1.5 crores. Next year, again, 31st March, you would have come and inspect the land. Just imagine the land value is now just 20 lakhs. The land value is just now 20 lakhs. That time they made some mistake. Actually, it was not fit for creating a building over there. It was that, earthquake prone zone land. Very easy to earthquake prone zone basically. Did you understand what I tell just now? If that is the case, you tell me. Now the bank has given me a loan of how much? 1 crore. But how much is the security with you now? Don't you think tomorrow if I don't pay, you'll be under big loss? Will it be considered as NP or not? Will it be considered as an NP or not? 100% yes. So if the value of the security is completely eroded, if the value of the security is eroded, then what will happen? Or if there is a fraud, Now, basically this, I did a fraud, no? I did a fraud on me. That value was actually not 1.5 crores. I did some cheating and made you sure that it is 1.5 crores. So now, who is under loss? It is the bank. Tomorrow, if I don't pay, high chances I will not pay. Why? Because the value which I have given security is 20 lakhs, but I have taken a loan of, I will not pay. What will you do? Max you will sell the land, no? What else can you do? Correct or not? So it is deemed, it has to be converted into NPA. Convert the account immediately to NPA. Understood? So there are two situations in which they will check the value of that security. Accordingly, they are going to convert that account into a NPA account. First one, if there is an erosion in the value of security, it can be reckoned as significant. That means that erosion value can be reckoned as significant when the realizable of the value of the security. Just imagine the realizable value of security. That means today if they go and sell that security is less than 50% of the value assessed by the bank at the first inspection. For example, first time inspection, the value of the security was 1 crore. Now the value of security is less than 50%. It must be 49 lakhs, 48 lakhs, something like that. If it is less than 50% in the second inspection, as the case may be, such NPA shall be straight away classified to doubtful. If you remember NPA, there was substandard, doubtful, loss. Don't follow that hierarchy. If this is the case, directly come to doubtful. Don't come to substandard, then doubtful. Directly come to doubtful. When the value of the security in the second inspection is less than, it is not less than equal to, is less than 50% of the value of the security inspected first time. So basically, can I tell they are just comparing the value of security with the value of security? In the first point, they're comparing value of security with the value of security. Second inspection, first inspection. Easy? Done. Second one, MCQ also, mug also. If the realizable value of the security, as assessed by the bank is less than 10% of the outstanding in the borrower account. Now they're comparing the security value with the borrower account. That means how much my money is outstanding in the loan account. They're going to compare those two things. If that value of security is less than 10% of the outstanding amount, also directly classified to loss asset. For example, I took a loan of 1 crore. I would have repaid. It came to 50 lakhs. Now 50 lakhs is the outstanding amount. 50 lakhs ka 10% you do 5 lakhs. If the value of security which is there with the bank is less than 5 lakhs, directly convert into loss account. Okay, it's a loss asset. No, because just imagine the value of the security is not able to cover 10% of the outstanding amount. Such a chindi amount it is security. So they're like, we are ignoring that security because tomorrow if they sell the security, how much they'll get? 5 lakhs or less than 5 lakhs. Sorry, less than 5 lakhs. Is it even a significant amount for the banks? It is not. Am I right? So they are going to ignore it and directly they're going to convert into loss asset. Understood kya? So first point is they're comparing value of security with value of security. Second point is they're comparing value of security and borrowing account, outstanding account. Easy kya? This is again MCQ. Whenever advances have been given by a bank, but what kind of security has been given? Either some term deposit has been given or some NSCs have been given. NSCs, National Savings Certificate, Kisan Vikas Patra, all these, if they have been given, in that case, they are not going to check that record of recovery. They are told if adequate margin is available. What is available? Adequate margin is available in the account, we will not consider it to be an NPA. If it falls below the margin, then we will convert it into an NPA. But what kind of securities must be given? These. Understood kya? Pakka kya? Then agriculture advances affected by natural calamities. But before this, come to this. What is agriculture advances? Agriculture advances, you understand? Farmers and all, they will take that loan. Okay. On what basis they will take that? They are going to grow crops by taking that loan. So it is based on the crops only they have decided key when to convert as NPA. Again, not normal NPA provision applicable here, something different for them. What is it? As per the guidelines, taken agriculture advances are of how many types? Two types. One is called as for long duration crops, one is called as for short duration crops. What is this long duration crop? Long duration crops would be crops with having a crop season which is longer than 1 year, and crops which are not long duration would be called as short duration. What is it? Long duration crops are those crops whose crop season is longer than 1 year. Now what is this crop season? Crop season is the duration, the day you sow the seed and the day you harvest it. That period, if it is greater than 1 year, it is called, and if you take an advance for that particular crop, it is called as long duration crop. Or if that time period is less than 1 year or equal to 1 year, it is called as a short duration crop. Understood kya? So the crop season means the period up to the harvesting of the crop stage would be determined by the state level bankers committee in each state. That state level, there is a department, they will take care of it. Understood kya? Pakka kya? Pakka kya? But the most important is here, when do we consider them as an NPA? Correct or not? When do we consider this as an NPA? The following NPA norms would apply to agriculture advances, including crop term loans. A loan granted for a short duration crop. What was short duration crop? Whose period is less than or equal to 1 year will be treated as an NPA if the installment or the principal or interest thereon remains overdue for 2 crop seasons. For example, the crop season was 7 months. 7 months was the crop season. Short duration crop, 2 crop seasons. 7 2s are 14. 14 months if they have not paid, they'll wait. Cross 14, NPA. For long duration crop, 1 crop season. For example, the long duration crop season was for 18 months. They're going to wait for 18 months. Understood kya? If not, they're going to convert into NPA. Understood? Short duration crop credit is twice of the crop season. Long duration crop credit is 1 only. Why? Short and short leg. So they're going into 2. Long duration already big. So only 1. Understood kya? This is not that important. You can do RM and you can leave it. Okay. Advances to staff. It is very simple. Advances to staff, I just want to explain one point. You think if I'm an employee in a bank, the bank can give me loan to an employee in 2 ways. The bank can give loan to an employee in 2 ways. One, as a part of employee advance. Or second one, the bank will consider me as a outside borrower and he'll give me a loan. So because of this, the disclosure in the balance sheet, it will differ. The disclosure in the balance sheet will differ. So they have told here, key interest bearing staff advances as a banker. That means as a banker, if it is giving me, it should be included as a part of advances. That means they are not considering me as an employee. They're considering me as a, it is like a banker and a borrower relationship. Then they will disclose all those loans as an advances portfolio, normal advances. But the staff advances by a bank as an employer, please circle the word here as a banker and here circle the word as an employer. If it is as an employer and not as a banker, then it will be required under the subhead called as others, under the schedule called as other assets. Understood kya? If it is given as a banker, it will be like a normal advances. But if they are giving like an employer, it will be formed under part of other assets. Understood kya? And generally, sometimes they give interest bearing staff advances or non-interest bearing. Sometimes they might charge interest, sometimes they will not charge interest. Understood kya? Any doubts kya? Computation of drawing power, very important. You can put RM in /mug. What is this? I already told you two things: sanctioned limit and drawing power. You remember? Sanction limit and drawing power. Sanction limit is the maximum limit up to which they will allow you to take loan, and drawing power is that how much you can draw every quarter or every month from that CC or OD account. Whenever you see drawing power, they are talking about only one thing: CC or OD. They are not talking about term loan and all. Okay, CC or OD. So you remember sanction limit, drawing power in the last recording we saw. Correct or not here? Sanction limit is the maximum limit. Drawing power is the amount which they are allowing you to withdraw. And every quarterly you are going to submit stock statement, debtor statement. On the basis of that stock statement for the next quarter, they're going to decide your drawing power. Correct or not? So can I tell drawing power can be maximum up to sanction limit. Drawing power can be maximum up to sanction limit and sometimes less than that also. Correct or not? Yes. So drawing power generally terms of DP is a concept of cash credit which is available from the banks. Drawing power is the limit up to which a firm or a company can withdraw from the working capital limit. You know, ODCC is purely for working capital only. Different from sanction limit. Yes. Drawing power is different from sanction limit. Sanction limit is the total exposure, total risk that a bank can take on a particular client. Drawing power refers to the amount calculated based on the primary security less margin. See, if there, you think and tell me, if my business is worth 10 lakhs, they will give the drawing power full 10 lakhs. They will reduce some margin. What margin? Safety margin. They will not give the drawing power of entire 10 lakhs. They will give me of 8 lakhs. Understood? That safety margin they are going to deduct. Consideration. Always banks make sure that the accounts of these OD and CC should be below both. What both? Below the sanction limit and below the drawing power, because that's a limit which is given to the account holder. So it must not cross the drawing power also, it must not cross the sanction limit also, because if it crosses, that out of order will happen, NPA will happen. Out of order, we did out of order in the last class. Yes. Banks duties, same thing. Banks always make sure that you are covered by adequacy of current assets. Generally working capital, these ODCC are given on your stock and debtors only. So make sure you are covered by adequacy of bank. Tomorrow what happens if there is a situation where it has exceeded the sanction limit or it has exceeded the drawing power, immediately the bank official, that employee, should inform it to the higher authorities, directly to the headquarters. Understood here? And last, one more point: whatever stock statement we are submitting to them, to the banks, make sure banks, they must not be older than 3 months. That means a quarter. It must not be older than 3 months. Max to max 3 months old you can accept to calculate the drawing power, not more than 3 months. Hey, understood kya? That's why I told you, for July, August, September quarter, they are going to ask me April, May, June ka stock statement. If you submit for March, they are not going to accept. If they accept it, you are going to write it. Okay, banks have done something which is wrong. Maximum which they can accept is 3 months older. Correct or not? Here, auditors concern in this much only. Okay, whatever the stock statements, quarterly returns, and statements submitted by the borrower to the bank should be scrutinized in detail. Make sure auditor, the bankers know whenever they are receiving the stock statement, data statement, they are scrutinizing it in detail. And most important, audited annual report submitted by the borrower should be scrutinized properly. You think and tell me, every quarterly the borrower is going to submit some statement, some draft financial statement, some stock statement, some data statement, and annually, once the company has got its books of accounts audited, the company will have to submit the annual audited report also. Don't you think the annual audited report and the quarterly stock statement should match? The auditor will tell the bank, make sure that annual audited report and that quarterly stock statement are matching. If they don't match, they have done something wrong. Who? The borrower. They submitted some fake stock statement in that quarter. Understood kya? Computation of DP, not that important. Stock audit, very important. Stock audit, what happens? There was one case, that's security, hypothecation. You remember hypothecation? They will create a charge. Neither the possession nor the ownership is transferred to the banker, but they'll have a fixed interest in it. Taken up. What is it? Tomorrow, if the loan amount is very huge, the OD amount is very huge. What is that huge? More than 5 crores. If the company has taken an OD account of more than 5 crores, the bank will have to go and do stock audit of that particular company who has taken an OD facility of more than 5 crores. Understood? They ask a separate question on this. So if the OD account is of more than 5 crores, in that case, please bankers, you yourself go and do the stock audit of that particular company. Understood? But what about less than, what about 4.95 crores? You'll be like, Atishay, not a big difference, no? So they're told if it is less than 5 crores also, like 1 crore, 2 crore, 3 crore, 4 crores, if the bankers wants voluntary to go and do the stock audit, go, no, who told you no? Understood? And the report has to be submitted by the stock auditors, which should be reviewed during the course of audit, and special focus should be given to the comments made by the stock auditors. As an auditor of the bank, I will check the stock auditors report कि what have they shown. Understood क्या? पक्का क्या? ठीक है. Then I told you that OD account, CC account, whatever the drawing power is, they are not going to give you the entire
Sir?
amount. They are, हाँ,
The screen is blurred, sir.
screen is blur.
Yes.
सर फोन लेके बाहर गया ना उसके लिए. Now is it proper? Now is it proper?
No, sir. It was clear quite a bit, but now it is again blurred.
Okay, just a minute. ठीक है. So I told you, no, the drawing power, they will not give you the entire thing. They will deduct some margin, safety margin. So as of now, you just remember for stocks, it is how much margin deducted? 25%. For debtors, it is 40%. ठीक है ना? So there's a question also here, somewhere here. You can solve this question whenever you're free at home. ठीक है ना? You have to deduct those values. ठीक है ना? For example, once you do it, you'll get to know. First solve this particular part. ठीक है ना? Then solve that question. You'll automatically get to know, okay, what is this calculation. It is very simple. If the question is silent, then deduct 25 and 40. If the question gives some percentages, use that percentage. For stock 25, debtors 40. Do that sum. Okay, na? Then comes, now what we have done till now, no, we understood from the bank's perspective. Now we are going to learn it from the auditor's perspective. Now only the auditor started off bank. Okay, na? The most important, I told you, is always advances. So when it comes to advances, auditor has to audit the advances. So they have told this is a separate question. In carrying out the advances, the auditor is primarily concerned with obtaining evidence about the following. See, when he's checking the advances, no, primary basic evidence what he wants is about these things. Basic evidence what he wants is about these things. What are these things? First, whatever amounts which are included in the balance sheet in the advances should be outstanding at the balance sheet date. For example, if advances, the amount in the balance sheet is 5 crores, that means 5 crores is having, those 5 crores amount is with some third party. It has to be paid to the bank. Then advances represent always amounts due to the bank. That means those are receivables. It must be like an asset. Taken. Amounts due to the bank are appropriately supported by loan documents. That you're going to check if whenever the company is giving, the bank is giving any loan, it must be supported by a loan document and any other documents as applicable. There are no unrecorded advances. Taken. If all completeness, all advances should have been recorded properly. The stated basis of the valuation of advances is appropriate and properly applied, and the recovery of advances is recognized in their valuation. Please make sure that you are getting proper audit evidence regarding the valuation of advances. Valuation, A, provisioning 25, 40, correct or not? That you have to check it and check it whether it is properly applied, and recoverability is being checked by the management. The advances are disclosed, classified and described in accordance with the recognized accounting policies. Check in NP na cash basis, PA na accrual basis. Appropriate provision should have been made towards advances as per the RBI norms, that 15, 25, 40, 100. Understood kya? Then there's a separate question again. What is it? The auditor can obtain sight about advances by study and evaluation of internal controls. That means if he wants to obtain sight regarding advances, one time will evaluate internal controls. What else can he do? And by, did you understand the question? One time will check internal controls. What is the other things which he can check for obtaining evidence about, where he can obtain evidence about advances? Please examine the validity of the record amounts. That means whatever loans, advances have been given, whether they're actually valid or invalid, taken a genuine or not. Examine the loan documentation. Review the operation of the accounts. Operation of the accounts, I told you, no, I didn't tell this. I tell this story in the regular batch. Taken a key. They open up few accounts. That regularization, you remember? Regularization, some kind of galata they do. They open up those accounts. They check how many every month whether they're paying properly or not. So operation of the accounts has to also be to check by the auditor. Examine the existence, enforceability and valuation of security. Make sure that if the bank has given any advance, secured loans in advance, make sure they have a security, and that security should be enforceable. Enforceable matlab tomorrow if they don't pay, the bankers must have the right to enforce that security. Check the compliance with RBI norms regarding classification and provisioning, and at last carry out appropriate analytical procedures. Analytical procedures, 100 times told you, analytical procedures means making some kind of analysis. That means forming some kind of relationship or doing some kind of comparison. So we are going to learn in the next topic taken up. But here I'm going to tell you what is it. The auditors know, they will compare this year's advances with the last year's advances. this year advance amount with the last year's advance amount. This year number of people to whom advance has been given with the last year number of people advance has given. This year's NPAs with the last year's NPAs. Understood kya? All this they will do. Why? To do this analysis ki whether the bank is growing or not growing. Understood kya? Pakka kya? Then directly come here, evaluation of internal controls over advances. This entire point is based on checking internal controls. It is written, no, in general the internal controls over advances should include the following. That means where and all the internal controls must be present when it comes to advances. Can you see how many points are there? Around 12. Are you going to remember all the 12 points? Not required. Select some few. Which few? I will tell. Take the first point. Take the second point. Take the third point, then take the fourth, fifth, sixth, basically first 6 points you take it, then last 3 points, first 6 and last 3. So what are we going to discuss? Internal controls over advances. First they have told bank, please have a proper internal control about what? That whenever you made advance, you make it only after satisfying itself your credit worthiness. So can I tell credit worthiness checking is like an internal control in a bank? Okay, whenever a person comes for a loan, first they have to do a proper scrutinization. Ask his financial statements, have his ITR return, this, that, Aadhaar, Vadar, everything you ask. Tomorrow, if he doesn't make that payment, we must have something which we can go against him. Correct or not here? So proper credit worthiness scrutinization must be there. Then all the necessary documents, loan documents, this agreement, that agreement, everything has to be properly taken, signed, contracted. Compliance with the terms of sanctions and end use of funds should be ensured. What is this? Whenever we give a loan, there are many terms and conditions. What is it? The most important terms and condition is the one which is written. The end usage of that fund. Whenever you ask a loan, the bank will ask, take, go and take. They'll ask you for what purpose. Make sure that for that same purpose they are using that loan. How will you understand? Open up that account in your bank. So you can open up that account. You'll get to know where the payments are going. You can track, no, to whom they're making the payments, from where they're getting the receipt. For example, if that person has told, I want to pay this thing, I want to buy a property, automatically you'll understand. If the opposite person, no, we can cross confirm with that guy also, whether you have sold a property or not. Understood kya? Sufficient margin as specified in the sanction letter should be kept against the securities. In the terms and condition, no, loan agreement will be written, okay, this much margin we are going to keep. Make sure that the same margin is actually kept by the bank. If the securities are in the nature of shares, debentures, then that security, shares, debentures should be transferred and registered in whose name? Bank's name. Wherever registration is required of the security, make sure registered on the name of bank. See, it is written next point. All securities requiring registration should be registered in the name of the bank. So what will happen? Tomorrow I'll tell shares, I'll give us collateral. Tomorrow if it doesn't repay, what will he do? He will sell the shares, he'll get lost, no? So immediately wherever registration is required, get the shares registered on the bank's name. Understood kya? Read the last 3 points, you already know. Account should always be kept within both drawing power limit and sanction limit. All the accounts which have been exceeded the sanction limit or the drawing power should be immediately brought to the higher authority of the banks, and operation of each advance account should be reviewed at least once in a year and more frequent intervals in case of large intervals. That means open up that borrower's account in your tally, check what is happening, whether you're properly receiving the EMI or not, at least once in a year for all the accounts, and for bigger accounts you have to do it frequently. Understood kya? Pakka kya? Will you do this question at home today? Do it. Okay, na? This entire income part, will you mug it? No. You just have to do RMN of this part. MCQ, what max they can ask? See, bank has 2 income. One is interest income, second one is other income. What is included in interest income? These are the 4 points. So in examination, max to max, what they can ask? No. MCQ, which one of the following is not a part of interest income? 3 they will give it from here. 1 they will get from here. Common sense, you tell me, we'll play ulta. Remember these 4 and go. Khatam. Correct or not? Remember these 4 and go. If it is not from this 4, take the other one. It is a other income. Understood what I'm trying to tell? So no need to mug. Just have a photogenic memory of these 4 things and go. This entire thing, don't read at all. It is okay. Taken if you see commission, loan processing fee, credit debit card fee, basically other than interest income. Understood kya? Then audit approach and procedures. What is this? Towards income we are talking about. Towards income and expense. First you have to auditors concerned. Audit in carrying out the audit of income. Income means that interest income and etc. The audit is primarily concerned with obtaining reasonable assurance that the recorded income arose from the transaction which took place during the relevant period and pertain to the bank. So can I tell they're talking about occurrence and cutoff no should be taken place during the relevant period. Relevant period cutoff aa gaya, and it must be pertaining to the bank occurrence, correct or not? And there is no unrecorded income, completeness, and the income is recorded at appropriate amount, valuation, accuracy, all assertions covered at one shot. Understood kya? Then RBI's direction. You tell me who's the regulating body for these banks? RBI. So RBI will be giving various directions. Please make sure, auditor, that whatever RBI giving directions to the bank, they have to follow it or not follow it. Follow it. Materiality. What is materiality? Already you know materiality. You set up a level. Correct or not? Over and above that, if it crosses, it is considered to be a material. Same thing here. If any item of income is not considered to be material as per the above norms, RBI would have given some norms. It is given here. Taken up. If it is not material as per the above norms, it may be recognized when received, and auditors need not qualify their report in this particular situation. Even if it is not crossing the RBI's materiality, it is less than that. It is not necessary that they have to recognize only when they receive it. I mean, they can recognize when they receive it also. For that, auditor need not classify his report. Revenue certainty. You would have learned in your AS. What is revenue certainty? Only when the company is certain that they are going to receive the money, at that time only you please record the sales. Same thing here. Only if the banks knows there is a certainty that they are going to receive that money, at that point of time only you record it in your P&L. Else don't record. The date gets certain, that time you record it. Ulta of it is revenue uncertainty. Same point they have explained ulta. If it is uncertain, then don't please don't record the income. Advances against security, I already told you. Whatever advances are given against those term loans like NSCs, KVPs, IVPs, then if adequate margin is there in that account, then no need to consider it to be NPA, even if they have not made payment for 90 days. Even if they are not paid for more than 90 days, but adequate margin is there, then no need to convert into NPA. Simple example. I went to a bank. I told bank, I need a loan. Bank told what kind of security? I told no collateral or not. I have an FD. FD is of 1.5 crores. FD is of 1.5 crores. You think and tell me. Loan amount 1 crore. FD amount is 1.5 crores. I have not made the payment for more than 90 days. But don't you think FD is something which is fixed, stagnant? If they sell that FD, if they take that FD, they will get that entire 1.5 crores. Adequate margin is there. What is that margin? 50 lakhs. 50 lakhs is that margin amount, correct or not? If that 50 lakhs is there, then don't consider it to be an NPA. Understood kya? Bill purchase, you already know. Bills collection, you already know. Renegotiation. What is renegotiation? We renegotiate with the bank to change the this time schedule of the loan, some tenure of the loan, some small changes in the terms and condition. For example, I was supposed to pay the entire loan in 7 years. On the 6th year, I went to the bank. Bank, can you extend 1 more year? Please, 8th year, can you do it? That is called as renegotiation. Understood kya? Reversal of income, please put it damn important. It was asked in your RTP of your May 25. What is reversal of income? I already told you. Whenever an asset account is performing, that is standard asset, they are supposed to recognize the income on a accrual basis. The moment it gets converted into NPA, they have to recognize the income on a receipt basis, cash basis. They have told, Atishay, for 90 days you waited. For 90 days you waited. So 90 days or 3 months or EMI amount, income amount would have been recorded accrual basis. Then from the next month, you're going to record only on cash basis. Do one thing. The 3 months earlier also, no. Reverse it. Reverse it. Reverse it. Yes. Either pass a provisioning entry or pass a reverse entry and provisioning entry. Understand? Provisioning matlab P&L ke debit side mein. Pass the same amount of the income on the provision side and reverse the income. This is applicable for state government guaranteed and central government guaranteed advances also. Because if you remember, for central and state, for both income recognition NPA it was. For central government only, provisioning NPA was not applicable. Understood kya? So that all reversal of income has to be done. Correct or not? Even previous years, if it is unrecognized, please reverse everything by passing a provisioning entry. Make a provision on the P&L side, debit side, and reverse those entries. Very important, they ask it. Taken up. And think, if there is too much of reversal of income, don't you think as an auditor you'll get that doubt? Okay, why too much of reversal income? You must ask questions to the bank. Why too much of reversal of income this year? What the hell are you doing? Correct or not? If there's too much of reversal of income, you must ask the bank, inquire the bank why there is too much of reversal of income. This entire thing is written over here. Understood kya? This and all is not important. You can do RM and you can move. You can. This was again asked in your RTP. Partial recovery is an NPA. Partial recovery is NPA. Just listen what I'm trying to tell. Partial recoveries. I took a loan of 1 crore. I took a loan of 1 crore is too much. Make it as 10 lakhs. I took a loan of 10 lakhs. Every month I'm supposed to pay EMI. Some part will go to principal, some part will go to interest. For 6-7 months I did not pay it. 6-7 months I did not pay it. You think and tell me whether it will be considered NPA or not. Of course, NPA, yes. Then after how much, for example, 6-7 months ka total amount which is outstanding now around is some, for example, some 1 lakh. That 6-7 months that EMI amount has accumulated to 1 lakh. 8th month I made some payment of 65,000. Out of that 1 lakh, I made a payment of 65,000. You think and tell me that 65,000 which I made a payment, how much is towards principal, how much is towards EMI? I made a ad hoc amount payment, no? I made an ad hoc. I did not make the entire 1 lakh ka payment. I made an ad hoc. Ad hoc matlab some random lump sum amount I paid to the bank. Now bank, how much they have to consider towards principal, how much they have to consider towards the interest. They have told accounting policies. Whatever policies you are supposed to follow as per ES9, that you follow. Accordingly, you have to bifurcate between the principal and bifurcate between the interest. Understood kya? Interest partly or fully realized in NPS can be taken to income. However, it should be ensured that credit towards interest in the relevant accounts are not of fresh or additional credit facility sanctioned to the borrowers. If because of that I would have taken a fresh credit facility, and for that fresh credit facility I've made a payment of that loan, please don't adjust it with the previous loan. It is a separate loan. For that separately you have to calculate. Understood kya? Memorandum account. What is memorandum account? It is an important question. Mugs, short note, they will ask you for 3 marks or 4 marks. What is memorandum account? You think and tell me. Once it is considered as an NPA, once it is considered as an NPA, in their main books of accounts, main tally which they are maintaining, there will be no entries, no? There will be no entries in it. Why? Because nobody is making any payment in that. But don't you think if they don't make any entries in that, they will lose the track of that particular account? So they're telling, main tally you don't pass entries, that is okay. Please maintain a rough account of that particular account. Please maintain a rough account of that advance holder, and there you keep on passing entries so that you'll have a track in how much is outstanding. Basically, memorandum means rough account. Please maintain a rough account for all the NPA holders, because in the main account you're not going to show any income, no, because you're going to pass entry only if it is paid by him. But here you maintain a rough account so that we understand how much income he's supposed to pay. Understood kya? Then comes income from investment. Again a short note mark question. Income from investments. What is it? There are 3 types of incomes for a bank on investment. One, interest income. Whenever the banks make any investment, they'll earn interest on it. Interest income, yes. Second one, tomorrow if they sell that investment, what will they get? Profit. So profit on investment. And third one, revaluation. Fair value investments, correct or not? Revaluation, either there will be profit or loss. So there are 3 types of incomes on investment for a bank. Either interest income, profit on sale, or last one, revaluation. Just read it. It is very simple. Expenses. Now expenses, how many expenses are there which banks suffer? They have classified into 3. One is interest, other one is operating, and third one is provisioning. Interest, operating, provisioning. Again, will you read this box? Not required here. Interest expenses, just 3. One is bank. People will give deposit to bank. They'll have to pay interest on deposits. Interest on RBI. They will take money from RBI. Correct or not? Here sometimes they'll have to pay interest to them. Bankers will take a loan from other bank. Again, they'll have to pay interest over that. So basically, interest is covered here. Operating matlab their day-to-day expenses, rent, electricity, admin, salary, bullshit. And last one is provision and contingencies. All kinds of provisions. Provision made in respect of NPS. Provision made in respect of taxation, income tax. Provision for diminution and value of investments, like fair value estimation goes upwards. Downwards it will go for provisioning. And last one, provision for any contingencies. Understood kya? Understood kya? No need to mug this, no need to mug at all. Just read it, or you can skip it also. Not that important. Take care. Now, audit approach and procedures. Will you mug this entire thing? Yes, it is audit approach and procedures for expenses. Just read 2 lines and understand what they're trying to do. See, basically, when it is expenses, what thing you're going to check? I'll be very honest with you. Your attempt, I consider these 2 points, no, operating expense and provision contingencies. From this, one is going to be tested in a paper. Take care. This is my understanding. One thing they're going to test it, either operating expense or provisions and contingency. These are 2 separate questions. Okay, there are 3 types of expenses: interest, operating, and provision contingencies. These are those 2 questions. Take care. In your attempt, chances are that they're going to test it from here. Now, what is this interest expense? Very simple. What and all procedures can the auditor perform? One, make sure that please he is more interested in checking the overall reasonableness of the amount of interest expense. He wants to check whether that interest expense which is showed in the P&L, no, it is reasonable. Reasonable means it is valid. It is valid. How will he do? He'll do by doing various ratios. That means the bankers would have taken various deposits on various different types of deposits, various different kinds of interest are being paid. He will take all those deposits, he will take all those various interest, he will compare it. He'll do that weighted annual average interest rate, and he will check whether it is matching with what they have actually paid. Interest rate, they will directly multiply it with the total deposits. What they will get? Interest expense. That much meant with the P&L. correct or not? So they will take that weighted average interest rate and they will check along with that. They can do various ratios also. Last year's interest expense divided by deposits, this year's interest expense divided by deposits. They'll get a rate, that rate should match. If the rate matches, the interest expense in accordance with the deposits is also matching, correct or not? Then they are telling, please make sure that they have a ledger breakup. Ledger breakup matlab, for different kinds of deposits, different kinds of interest expense will be there. No, for savings account interest will be there. For term deposit interest will be there. For recurring deposit interest will be there. Correct or not here? So different kinds of deposit, different ledgers must be there, maintained, and you must have a breakup of all those ledgers and check whether interest is being properly paid on those ledgers or not. And the last point, very important, please auditor on a test check basis. What check basis? Test check, sampling basis. Do the calculation of the interest also. That means you yourself calculate on few accounts whether interest is being calculated properly or not. And what you're going to check in that calculation? First, interest has been provided on all deposits. There must not be even one deposit which has been missed for making the interest payment up to the date of balance sheet. Interest rates are in accordance with the bank's internal regulations, RBI directives, and the agreements made with the deposit holders. RBI would have given a directive, no? The maximum interest rate for a term deposit which a banker can give is 9%. So maximum what a bank can give is 9%. Can a banker give for 7% also? Yes. That is based on the internal regulations. So make sure that the interest rate is as per RBI directives and the bank's internal regulations. Interest on savings account are accordance with the rules framed by the bank and RBI. Similarly, for SB account also, RBI has given a rate. The bankers themselves will have a rate. Make sure it is accordance to that rate. And last one, interest on inter-branch balances has been provided at the rates prescribed by the head office. One branch will give money to other branch. No, for that also they will charge interest. Freely nobody is giving. For books of accounts, even branch sales, branch accounts. Even it's the same branch, same company, but we still add up a margin and sell. Same thing here also. Understood? Kya? This entire thing you can do RMN. This entire thing you just do RMN. Then comes operating expenses. Very simple here. Very, very simple. Operating expenses kya? The day-to-day expenses. Correct or not? So then please first always underline. Please always study the internal control. You know why is it important? Banks is huge. Taken. Everybody must have that. Those responsible person must have that authority. For example, tomorrow if they want to make a payment towards electricity bill, the bank's account and it will be paid. No, somebody who has got the responsibility should sanction it. Electricity bill paid. Correct or not? So that is called as an internal control. Okay, who's that person who's responsible to authorize the expense amount payment? Should examine whether there is any divergent trends in respect of any major item of expense. Divergent trend. What is divergent? Huge difference, a huge deviation in any of the expenses. What is that huge deviation? Last year the rent expense which was there, it was total 20 lakhs. This year rent expense they have paid 50 lakhs. Why there is a huge deviation? Correct or not? Check, no? Then perform analytical procedures in respect of expenses by working out the ratio in terms of total expenses and comparing it with the corresponding of previous year. Compare this year's expenses with the last year's expenses. Analytical procedures. This divergent trends you can check it in this way also. You take for every month you take stationery expenses every month. First 3 months stationery expense was around 2 lakhs 4 lakhs. Next 3 months stationery expense was 7-10 lakhs. Next year again it was 1 lakh. Why? There is a divergent trend every month. You're going to ask questions to the bank. Then last one, verify expenses always with the reference to supporting documents, bills, vouchers, invoices. That must be. So underline first place system of internal control and authorization procedures. Secondly, divergent trends. Thirdly, analytical procedures. Fourthly, supporting documents. These are the most important terms. Then comes provisions and contingencies. Nothing rocket science.
Sir, your voice is breaking, sir, and screen is also.
Voice is breaking. Continuing, next is provisions and contingencies. Keep in mind all kinds of provisions. All kinds of provisions. First, provisions regarding to NPA. Provisions regarding to taxation. That means income tax. Various other expenses related provision. Expenses related provision. Array. Depreciation ho gaya, rent ho gaya, last month rent. Because last month rent you're going to pay in the next year, no? So you'll have to make a provision. So all other provisions like that they have given some 1, 2, 3, 4, 5. 3 points already discussed. See. Ensure that compliances for various regulatory requirements for provisioning as contained in various circulars have been fulfilled. Whatever provisions that bank has to make as per various circulars given by RBI, all those provisions have to be made. Second one, obtain an understanding as to how bank computes the provisioning on standard and non-performing assets. Check whether how they are calculating it. Taken up. Then obtain a detailed breakup. Breakup we are going to ask bank, you have told me these are the NPAs, no? Give me a breakup. What is substandard? How much is doubtful? How much is loss, because each of them has different provisioning, correct or not? Then obtain the tax provision computation from bank's management, that is income tax provision. And last one, examine all the other provision for expenses. In short, if I make it simple, first 3 points are about NPA related provision and circulars given by RBI. The next point is tax provision, last point is provision for expenses. Understood kya? With this we are done with the bank chapter. Important chapter, please don't skip it.